Hello, everybody. I'm John Locke, and I'd like to welcome you to the LockeInYourSuccess.com Trading Performance Podcast, where it's all about real traders, real problems, and real coaching. Listen up and enjoy the segment. Trading and change. The trade itself has very little to do with your ultimate success as a trader. It has everything to do with your short-term success as a trader. Right? If you can find a trade that's working in the current environment, that is fantastic. But you have to realize the market is in a constant state of change. Whatever you're doing is going to have periods of time where it's not working because volatility shifts are so different and react so differently. It's always going to change. Sometimes, or most of the time, that change is temporary and the markets come back into favor. Like, we've been trading the bearish butterfly now since, I think I've been tracking that on the website since 2007. We've had years that are 280%. We've had years that are 60% losers. It's just the same trade. We haven't changed anything, right? It's just what the market has been doing over time, and that's how much the market literally changes. And if you hold through that temporary change, you have a very good long-term trading system. Right? Because last year was the worst year I've ever seen for the bearish butterfly. This year is turning out to be one of the best years I've ever seen for it. Right? So just very different conditions. And it is that way with our market neutral trades also. We have, even have something with a really high win rate, you might have really good returns a couple of years or a year or 6 months, and then you'll have flat returns for a year or 6 months, a couple of years sometimes, or maybe you'll be negative for a year. The variations are less, but you still come out with the same result. Realize though there's also permanent change. Right? Things change. If you made shoes in the early 1900s in the United States, you're out of a freaking job, right? Because there was a permanent change in the marketplace. You went out of business. So realize that those do exist. Many of the trades we do today weren't possible 25 years ago. Technological changes, volatility shift changes. Some of the trades we do now weren't possible as little as 5 years ago. We didn't have the options, right? We have new options, the weekly options in the marketplace. It gives us a lot more flexibility. That's pretty cool. That's the good side of things, right? But realize at the same time, algorithms are being programmed into market maker computers that are specifically designed to learn the way you trade, to learn the way you execute trades, to learn the way you, where you get fearful, where you get greedy, where you're going to cave in. And they're getting more powerful, more advanced every single day. They're using that information against you for the purpose of taking your money. Is that anything new? No, they've always done that. But they're doing it now at a rate that's faster, exponentially faster than it's ever been in history. So thinking you're going to have this set of rules and make 10% a month for the rest of your life is ludicrous. Regardless of the market conditions. Things are going to be changing too fast. And that, in our market, is going to be changing a lot with it. There may be a time not in the not too distant future where you're doing things completely different than you're doing them now. And you have to be aware of that. You have to be ready to adapt to those things. So, what if they put in a law that prevents short selling? You say, well, that's not possible. That's impossible. Well, haven't they done that already?
Yeah, they did 2008.
Right, 2008, prevent short selling. What if they prevent it altogether? Some people think it's a good thing. What if they say, it's just not fair. All these people, all you people, my voters, have all your money in 401ks. It's not fair that the evil institutional guys can take, they can short over after the hours and they can take all your money. It's not fair. Let's make a law that prohibits short selling. Let's put in a circuit breaker. Do we have any circuit breakers in the market? If it drops too far, they shut it down. What if we put a circuit breaker into all stocks where you only drop 1% a day? What's that going to do to volatility? What do we trade? We trade volatility. It will be gone. Now, I had traders when they put the S&P circuit breaker in, they were all excited. I said, what are you, out of your mind? You know where that leads? Right? It takes volatility out of the market. It takes money directly out of your pocket. Is what it's doing. So you need to be aware that those things may happen politically, and you need to be aware that, what if computers come so fast and so efficient that fear and uncertainty leave the market?
You got a big one on the list here.
Yes, what is that?
About $1 quadrillion worth of derivatives that the banks are holding, and when those break, they might come in and say, we're going to outlaw option trading.
They could do that. They could outlaw option trading, right.
Got to go to transaction tax.
The transaction tax, yeah.
Transaction tax is small compared to the SIBO fee for 65-cent SIBO fee per option.
Right. But you just have to be aware that if you're doing this full time, those changes can occur, and it can happen. And our edge can disappear in the market. So we need to be on top of what's changing and how it's changing. I mean, if you were a market maker, 15 years ago, your job's done. You're through. That's where all the educators came from, right? They couldn't make money in the retail market, so they decided to teach. But your job could disappear. So just keep that in mind. But there's a lot of stuff we can do, and I truly believe that we'll be able to make money in the market long term. But things are going to change. Structure is changing. There's a friend of mine. He works with a lot of Goldman guys, and he talks about all their hedging strategies with them and so forth, and with the computers and how fast they can hedge things now. The volatility spikes they're happening so quick, so we end up with an environment with very, very low volatility. And when they shift, when they decide to hedge, they're real time, they're fast, and the volatility just spikes like crazy. That's hard on us, right? That's very challenging on us. And they're getting faster. So certain edges are going to start to get weaker. They're going to start to maybe disappear a little bit. Maybe they won't. Maybe they can be as fast as they want. No matter what they do, they can't affect us. I don't know. But we have to be aware that may happen. So the ability to adapt is going to be crucial going forward. And that's really true for any industry. Successful long-term traders realize a trade is not enough. Having a trade. It's fine to do while it's in fashion and it's working, and if you're just using it for spare money or whatever, that's perfectly wonderful. But if you're going to be out there, you're going to be serious, you're going to be trading for money, having a trade is not enough. A trade is nothing but a vehicle or a process that hopefully gives us an edge and works well in the current environment. You need to make sure you know what the edge is specifically in whatever trade you're doing that is allowing you to pull money out of the market. And you should also be aware of what is going to make that edge disappear. When is that going to disappear? What events have to happen geopolitically? It may affect your voting. It may affect everything. What's going to make that edge disappear? If you know what's going to make that edge disappear, you can be much better prepared for it. Remember, every vehicle, every process, I don't give a damn what it is. I don't care if you're trading butterflies, calendars, condors, space trips, road trips, whatever. They're the same freaking thing. They're just options in different places, right? And every one of those has a weakness, where it's going to be exploited. And you need to know what those weaknesses are. Realize that some of the most risky positions that you can put on look the safest. Right? You can have these very, very wide positions. If you've done condor trading, a wide condor, which has a higher probability of success, is much more risky than a narrow condor. Right? It's more volatility sensitive. Right? It's more problematic when the market blows apart. Some of these, broken wing butterflies or broken wing condors way below the money, very, very risky. They look very safe. You say, how could that thing possibly lose? Yet the market comes down, volatility crushes it, options prices shift, and they get destroyed. So make sure that you are, whatever strategy you trade, and I don't care what it is, there's nothing wrong with trading that strategy, by the way. I think it's perfectly fine. If you want to go in and trade it, that's great. As long as you're trading it appropriately sized. Who the hell cares? But don't over-leverage yourself if you don't know what the actual risks are in the strategy. And don't go off of what somebody tells you, including me. Test it for yourself. Make sure you understand the risk behind any strategy that you do. Because at some point, the market is going to take advantage of whatever process that you happen to have. And that is what I have for you today. If you have any questions or comments or anything else you'd like to see in the next Trading Performance podcast, please list that in the comments, and I'll personally answer your questions and comments for you. Also, I'd love to encourage you to come on over to LockInYourSuccess.com. That's LOCKE in yoursuccess.com, and check out our Trading Performance and Pro memberships, where you can find the tools you need to become a much more effective trader, regardless of the type of trading you do. Thank you for joining me. I look forward to seeing you on the next Trading Performance podcast.